Karuna. On behalf of Edelweiss, let me welcome you all to the Q2 FY19 earnings call of Uflex Industries. From the management today, we have Mr. Anand Shri Chaturvedi, the Vice Chairman, Mr. Rajesh Bhatia, Group CFO, and Mr. Rajesh Agrawal, the VP Investor Relations. So without any further ado, I'll hand over the call to Mr. Agrawal and take the call from here. Thank you, and over to you, Rajesh.
Thank you, Shraddha. Good evening, everyone, and welcome to the second quarter 2019 earnings call of Uflex Limited. On the call today, we have Vice Chairman Mr. Anand Shri Chaturvedi, Mr. Rajesh Bhatia, Group CFO, and other members of the senior management team. Let me quickly give a brief introduction of Mr. Chaturvedi. Mr. Anand Shri Chaturvedi holds a graduate degree from Babson College with a triple major in finance, global strategic management, and economics. He learned the trade of flexible packaging both domestically and internationally with hands-on experience as a trainee and apprentice in India, Mexico, Poland, Egypt, UAE, and subsequently spearheaded the expansion of Uflex in the United States of America. He is currently serving as Vice Chairman Flexpins and is heading the overseas business. Mr. Anand Shri Chaturvedi brings with him a vast array of experience right from his first job at the age of 15 as an intern and assistant to the late US Senator Edward M. Kennedy, followed by stints at DreamWorks, TJ Maxx, Accenture, Mubadala, and his own venture capital firm that he co-founded while at college. Mr. Chaturvedi is additionally vested with the responsibility of global product stability, R&D, HR protocols, and also dons the hat of Chief Cultural Officer at Uflex. Before we begin, I would like to remind you that management will make forward-looking statements during the course of this call, and our actual results could differ materially. Uflex assumes no obligation to update any forward-looking statements or information which speaks as of their respective dates. Speaking first today is Group CFO Mr. Rajesh Bhatia, and then he'll be followed by Vice Chairman Mr. Chaturvedi. After that, we'll open the call to questions from analysts. Over to you, Mr. Bhatia.
Thank you. And first of all, let me wish all of you a happy Dhanteras and Diwali. My prayer to Almighty that this Diwali may bring the best of fortunes for you. I know that the markets are not doing so well currently, so all the more important that these wishes are come true, and I really hope that everybody is able to enjoy this festival with their families, and all the best to everyone. Coming to the Q2 results for the quarter, and as we had demonstrated in the Q1 itself that the production volume was up 10.5% in the Q1, and the sales volume was up about 12.7% in the Q1. So Q2 on both these parameters has also reported reasonable growth. So total production volume for Q2 is again up by about 9.5%, and the sales volume is up 10.5% on a YOY basis, and resulting in a 26% growth in our revenues, which is partially coming from the volume growth and partially from the raw material prices increase. As we see that the Q2 of FY18 we had crude ranging in the range of about $47 to $50, and in Q2 FY19 we have the crude ranging from $68 to $72, $73. So that's what really explains the 26% growth in volumes, which is driven by about 10.6% sales volume growth, and rest is on account of the raw material variations. EBITDA level, again, we have been able to demonstrate a very steady growth in the EBITDA level. So EBITDA for the quarter is again up about 12% as compared to the Q2 of last year, and on an H1 basis also the EBITDA is about 10% higher as compared to the H1 of FY18. At a PAT level, we marginally up, as we'd explained in the the calls last time also that, this is due to the effect of higher interest costs as well as the depreciation which we are incurring for the Sanand facility, which currently is not reflecting in the business of that. So we still, there are still under recoveries on that account, and I think as we go along, we will ensure that, that business is ramped up as quickly as possible, so that, about 20 crore, which is on account of interest and depreciation of these two, that has to be absorbed by higher volumes coming from the our aseptic packaging business. This quarter also gives me the pleasure to tell you that, this is the highest ever quarterly turnover we've achieved in a quarter of about 2,000 crores. On a standalone basis, again, this has been the quarter where we've achieved the highest ever turnover. And the individual businesses, packaging films, India, as well as, if we see the overall packaging film volumes, I think they are also the highest ever in a quarter. And the India packaging films business as well as the Poland packaging films business have also, given their best volume performance during this quarter. And we had this quarter some, mark-to-market because of the foreign exchange fluctuations of about 8 crores, but this EBITDA is considering all those effects of that foreign exchange fluctuation, as we see the Indian rupee depreciating substantially against the dollar during this quarter. But largely in the Indian businesses, we not very well, we not hedging any of our imports or our dollar liabilities. So that, has come to affect the EBITDA a bit. And the EBITDA of 265 crore this quarter has about 8 crores on account of the foreign exchange fluctuations, without which it would have been about 273 crores, as we say. I think we are able to, so the main theme this financial year has been that, we've been able to grow our volumes both on the production as well as the sales side. We are ensuring that, the capacities what we have already installed are utilized to the max, and that's where they ultimately result in higher revenue and higher profitability. And the focus is clearly on improving the utilization levels and also make the aseptic packaging business sustainable as we go in the H2 of the FY19. And we'll be looking at about, we had given a guidance that we'll be looking at about 1.5 billion packs exit run rate. I think we still sure of achieving that number by March of 19, and that's where sort of we are. On the debt side, there is no really anything to report because there have been normal repayments which have been made. There hasn't been much debt which has been added because of any fresh loans taken, or there were some small amounts of the facilities which we had already committed, which were drawn down during this period. But again, on a net basis, we've not added any debt during this quarter. As I've been saying that, the EBITDA margins for the polyester BOPET films continue to be good, and they were better in this quarter also. And we have today the increased profitability is definitely taking higher BOPET prices and into consideration. On the packaging side, whenever you have abnormal increase in the raw material prices, that affects the profitability of that business, because as I've said earlier, there's always a lag in that business of between 1 month to 3 months. So a stable crude as well as a stable exchange works very well for that business. But during these turbulent times, we are also talking to some of our customers to that such a wide variation in the prices affects the stability of the sustainability of the businesses. So we keep on talking to them about how do we make it more sustainable both for us as well as for them. And clearly, as we go along into the H2, the endeavor is to piggyback on a volume growth coming from the films division as well as the packaging division. The packaging division, still we have much more headroom to increase our production. We have enough capacity. We today doing about this quarter we did about 21,000 tons, so which means about 85,000 tons on an annualized basis. But we have headroom there because currently, excluding our aseptic packaging business, we have capacity of about 135,000 tons in the packaging business, which we are looking to ramp up as we go into the H2 and the subsequent periods. So overall, good quarter for us in terms of the physical as well as the financial performance. And there have been a lot of product innovations. There's a lot of noise around the recyclability, and I think as we go along into the call, I'll request Ananth Chaturvedi to inform you about some of the new product launches that we've done, some of the R&D efforts as well as the other efforts on the product side which we keep on doing. Obviously the endeavor is to be giving first solutions to the customers and keep on innovating this, so that that commoditized things, how can you extract the maximum value out of your innovation which you ultimately have to offer to the customer. So that's more or less sums up the performance for this quarter, and I'll hand over to Rajesh to further steer the discussions.
Hello.
Can we open it up for questions?
Yeah, Rajesh.
So we now request Mr. Ananth Chaturvedi to give some light on the products and the R&D efforts, and then we'll open up for the question and answer.
Perfect, yes. Am I audible?
Yes.
Wonderful. Thanks, Rajesh. Thank you, Mr. Bhatia. So, I would like to give an update. First of all, it's wonderful to be on this call, and, happy celebrations and holidays to everyone who's celebrating in India this week. I'd like to talk a little bit about Uflex and where we are today from a strategic perspective. So if you take a look, at our past projects and our sort of rate of development and rate of growth over the last couple of years, you see that we've grown in sectors like Asepto and our liquid and new product divisions, while at the same time we've actually worked very hard pretty much since 2013 to consolidate our global commodity businesses, and that includes our packaging business in India as well, which is a very interesting, healthy mix of specialty and commodity. But we've done, I think, an excellent job of consolidating our global assets and then resetting the strategy for where the direction of those businesses are really going to go. And this quarter, you'll see, after a long time, we're getting some relief, which is a natural market relief on the prices of polyester and other sort of substrates. BOPP and other things are also beginning to catch up, although that market is going through a very interesting time right now. But if you look at our major product, which is polyester PET film, we're going through a very interesting cycle from consolidation to now priming ourselves for growth, but a very strategic kind of growth, which is basically very, very product specific. So if you've been following some of the news stories and some of our product developments, you'll see that in Pack Expo this year we launched a variety of new products. Our balloon film, for specialized for the balloon market, our high barrier metallized film, which is one of the highest barriers that any film can achieve, and actually competes with films from other non-Indian and other sort of Asian and European manufacturers. And then our nylon replacement film, which is basically taking advantage of the fact that the nylon market has had a huge shortage over the last couple of years, and no PET film today can replicate those kind of barriers and substrates. So our film is a step in the right direction from that perspective. The film that actually has been has everyone buzzing has been our concept film. So the idea really, I took it from automotive, where you launch a concept car to showcase the design direction and the technology direction of the firm that a particular company is sort of headed into. So we said, why not apply the same concept in packaging and in polymers, and we launched a concept film, which is a world's first completely disruptive, completely unique product, which is about 40% less dense than the current films any film that exists in the market today. But it's double the strength and double the barrier. Along with being 40% less dense, because you're using 40% less material, it's actually also significantly greener and much, much more easily biodegradable and much better for the environment. So, this concept film, Viome, which is about, I would say, about 8 to 12 months away from actual production, is a very, very good indication of where Uflex R&D is headed. We're really a company that's in transition between our stable of commodity and specialty products to now going towards much, much more specialty products and reaching a point where the majority of what we do is specialty with a sort of a baseline in commodity, because we have to participate a little bit in that market and provide customers the overall solutions, the overall packaging solutions, the macro packaging solutions that our customers seek. So that's sort of, you can see that's the sort of design and implementation direction that Uflex is headed in today. Mr. Bhatia talked some very interesting things about sustainability. That also is actually a fantastic opportunity that we are seeing evolve today from a product perspective. Sustainability is something that we've been discussing, especially in the internal sort of polymer tables for a very long time. A lot of different solutions exist in the market today. A lot of different solutions exist to go green, and there are different varying degrees of biodegradability and different types of that biodegradability that that we all can read up about. However, now there's realistically a conversation starting about sustainable films and about really, making films that are good for the environment and provide a very, very low carbon footprint. So if you look at, our portfolio, we're the current market leader in that. We're the only filmmaker in the world that makes a 90% post-consumer recycled waste film, where we're taking 90% of, the raw material from used post-consumer recyclable waste, bottles, packets of chips, and etc. And we, through our unique process, we're converting it back into actually base film that's being used in a variety of markets. The lead of this has been really the market for labels, and if you read recently about EPM and other sort of label manufacturers going towards this direction with 90% PCR, There's very, very few companies that can provide that solution. Really only us that have taken the lead in that. So, some very, very interesting things from that perspective. But the key thing, I think, the key takeaway is that, we're a company sort of in transition, and we're transitioning our R&D development and the way we develop new products and deploy new products from now a global perspective and a sort of exposure, global exposure on both the Western front as well as the Asian way of, launching and sort of going after these new products and these new opportunities. The same way, if you look at our pricing strategy when it comes to our current range of products, we've taken the most aggressive stand in the market, and we're getting the most value for our investors in terms of getting them, the lion's share of price increases that we can get after on the marketplace. If you do a market survey, you'll see that Uflex ranks currently is the number one price leader in the market in most of the areas that we're participating in, and that's been a very strategic focus by Chairman, myself, and the senior management team to go after the global markets in that way to get the best, as I said, lion's share of returns. So I think Mr. Bhatia, Mr. Agarwal, that's it from my side. I think we can open up for questions.
Yeah. Thank you, Mr. Chaturvedi. Karuna, we can take questions.
Sure, sir. Sure. Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. The first question is from the line of Rahul Veera from Abacus Asset Management. Please go ahead.
Good evening, sir. Just wanted to understand in terms of the pricing power of our company, how is it easy? How much is it easier to pass on the prices with the crude prices playing a spoil sport? And also the demand-supply mismatch in the BOPET, how is it affecting us? What are our views from the medium to long-term perspective?
So I think if you look at the way the demand is for the BOPET films, I think both India and overseas, it's very evident that we are increasing volumes. The film volumes this quarter, the packaging film volumes this quarter has gone up by about 9%. And as we are, as we said on the earlier calls that we fully sold out in Poland, we fully sold out polyester in US. We fully sold out in Egypt.
Right.
Which means that as you increase your capacity utilizations, so your pricing power is much better when you go through these kind of a cycles where the raw material prices are increasing. And that's, if you see for the last 2 quarters when the prices are increasing for the crude, the raw materials. So we've been able to pass on to the customers fully till date. And the demand supply on the polyester side looks quite, sort of good. And we feel that, sometime in the near future we will have to look at, some sort of a capacity expansion at our overseas.
Right.
So that, we don't lose out on our market share and somebody takes away that. So currently the demand supply and the raw material pricing being passed on to the customer, I can say that, it's much more than even the raw material prices have been passed on to the customer. As Anand Shri said, that we've taken a leadership position in the pricing, both driven by the value adds to the customers as well as delivering them, the committed quantities and the quality. So obviously from a price point today, there is clearly we are seeing a margin expansion in BOPET in this quarter.
So any large BOPET projects do you see coming up in the next 2 to 3 years?
I think we not too focused on that, but clearly I find that next 2 years the things look to be bit stable. Next 18 to 24 months, the things look to be bit stable. There will be capacities coming in. It's not that the capacities will not be coming in, but are they going to destabilize the demand-supply situation? I think the answer is no. That's how it looks like.
Right. Fair point, sir. Yeah. Thank you so much, sir.
Thank you. The next question is from the line of Jitin Parmar from Aurum Capital. Please go ahead.
Yeah. Good evening. And thanks, Anandji, for joining for the call. Rajeshji, thanks for elaborate presentation. I have a few questions. The question, basically, I wanted to first find out what are the spreads in the films in BOPET and BOPP, India and international.
So I see that currently, if we look at, obviously we making our overseas businesses in the films is making a higher margin than India. So India, if I tell you that in the last quarter we had a situation where the prices were for the BOPET films were about 140 rupees. And the raw material cost was about 90 rupees. So there's about a 50 rupees gross value addition. In the overseas markets, particularly in the matured markets, it's a bit higher than what we had in India in this quarter.
Okay. And this price lag, we talked about it in the last conference call also. Now, will crude moderating, will it help us in the further quarters, or, how does it work?
So I think the demand supply is what drives the prices on the film side. Okay. Mm-hmm. So if the crude moderates and it is more stable and all that, so it will bring more stability to the packaging business, which today, because of a huge variation that we've seen in this quarter, for the last 2 quarters, I'll say, not even this quarter, has been a bit underperforming because, last quarter and again this quarter, the prices increased substantially for the crude. And because they work on a lag effect, so their performance, goes down. But, as the margins in the film businesses have been improving given the demand-supply equilibrium situation, in the polyester film industry. So we've been able to offset that, a sort of lag effect to a very large extent, and that is why you find that, even with that lag effect, the EBITDA has improved. Given the constant prices, I think it will augur well for the packaging film business.
Okay.
Packaging business, sorry, packaging.
Yeah. So, on Asepto, have you been able to add any clients? And what is the status there? Is the plant EBITDA positive, or does it still burn money, or what is the status? And also on the machinery, we had some issues with machinery and all that. Is that getting sorted out?
So
machinery means I'm talking about the packaging machine on the plant side.
Yeah. So on the plant side, we still not EBITDA positive. So, then if we are not EBITDA positive, there is no question of interest and depreciation recovery. We today at about 32 customers in all 3 segments, and our trial runs at 67 customers have been successfully completed. We are, some of the customers who were importing these from China, and they are also affected in a big way because of this rupee depreciation. So they are also, we will be close to finalizing a big contract with all these customers also who've been China customers, because they also are looking for more price stability and the local availability, which is they can order as per their immediate requirements, and they don't have to import it. So their import lots can be much smaller. On the lines, we have already on the filling lines, we have already commissioned 2, and we've closed the deals for 7 lines, and the rest we will complete by the end of this fiscal.
Okay. And so my question, next question is basically on this move towards, the transition of the company towards specialty and value-added solutions. How much of, would that be a part of the company in the sense that, revenue and bottom line wise in the next 3 or maybe even 5 years? If some color can be thrown on that, what is our aim?
So I think I'll request Anand Shri to kindly
sure.
Help us with his insights onto that.
Sorry, could you repeat the question?
Yeah, I mean, since we are moving, having a transition from, more of commodity business to specialty solutions, how much of that would reflect in revenue in the next 3 to 5 years?
Oh, honestly, our target, sir, is to have it reflect completely on revenue. If you look at it, our average, margin is, today somewhere between, 13 to 17%. If you, average it out across the board, our target is to take this above 25%, especially within the next, 3 to 5 years, which is a very long-term view. In our perspective and from our business, cycle perspective. So, our target is to raise the, average margins across the board, but especially start capturing margins that are, 25 to, between the range of 25 to 35%, as opposed to playing, in places where the margin is, has been traditionally in our business between 5 to 15%, which has 15% being the excellent category of the margin. So our entire focus is basically on putting up, the bottom line numbers, which of course take into account, top line growth and top line numbers. Our entire focus is, to do this from a revenue perspective, in complete totality.
Okay, great. So my next question is basically on the BOPET. Since BOPET is not recyclable, and there have been instances where, especially in Maharashtra where I live, there's a lot of issues from the Pollution Control Board about EPR and all that. I mean, is there, what are we thinking in terms of, if if something happens to BOPET, it gets, there's a ban or something, how are we going to mitigate that risk?
Sure. Let me answer that. So if you look at the ban and if you look at the Maharashtra ban as well, sir, it's really, to be honest with you, more focused on really the low end of the polyethylene market. It really the ban is more on sort of cheap plastic bags and cheap plastic polymers that that are very commonly used and very commonly thrown about and shown in litter categories and things like that. Unfortunately, polymers in general and packaging and plastics in general have a poor PR